So let's talk about some homework items from Chapter 4. So here's my list of problems for all of the chapters covered on our first exam. We did Chapter 2 last week together, and I'm sorry about throwing my dog out there as a talking point for a second video in a row. I guess I couldn't help myself. I'll try to avoid playing that card too often. And at the end, I didn't give you a proper goodbye because I was running over to about 15 minutes of time and was trying to squeeze the whole video into one piece. So sorry about not the lack of a proper goodbye. I'll try to be better this week. So for Chapter 4, that's the next coverage, I've assigned problems 1 through 10, 14, and 15. That's from the back of the book here. So this is on page in my 115. This is the financial planning problems. That's what we're talking about for homework every week. 1 through 10, excuse me. 10, and then 14 and 15. Now, I'm not going to do all of those with you right now. I'm only going to do a few just to kind of talk through them and to hit some highlights that are going to come up for sure on the exam. But you're responsible to be able to do all of these. The solutions for all of these are in your Chapter 4 folder. So it's important, I would strongly suggest, and you've heard me allude to this in my voiceover presentations, I would strongly suggest this order of things to do each week. I would listen to my presentations with my voiceover, and I would take notes on them. I would open up the PowerPoint versions, I would play the narrations, I would watch the slideshow with my narrations, and simultaneously I would print out kind of a version of the slides with me so that I could write some things down to the side that your instructor, seems to really like. I would make notes of those things and kind of try to clear up anything for myself that didn't seem to make sense but that the voiceover provides. And then, after I'm done watching the chapter, listening to the chapter, writing my notes down, I would try these problems. These are your homework problems for practice for the exam. We're not going to do all of them together in this video, but we'll do a few. So 1 through 10, 14, and 15 this week. After you've done those, I would go and check your answers. I'm opening the document here. It's in your Chapter 4 folder for this week. Look at your financial planning problem answers. Check all of them. Make sure that you're getting things right, that you're understanding what's going on. Then, after you've done your practice, you should be ready to try your homework assignment and online quiz for credit for the week. So you've got until Sunday night. In this case, this week, it's until Sunday, May 26th at 11:59 p.m. to get online and do your 10-question homework assignment where you get up to 3 chances. Right? Do that. And then your 10-question quiz where you only get 1 chance and you only have an hour to do it and got to do it in one sitting. The questions are not usually that hard, and the hour time limit in the case of the quiz is more than enough to do these. They're always 10 questions long. But I would follow my notes and first listen to the presentations, write things down, then do these practice problems, and then at the end of the week, once you should be well prepared, I would try my assignment and quiz. This is all the more reason not to leave everything until Saturday and Sunday every week. Okay, now after the preaching, let's look at a couple examples. So let's do number 5 first, or talk about number 5, and number 6 by contrast. Stewart's in the 25% tax bracket. He sold stock for a capital gain of $20,000. How much tax does he pay? He held the stock for longer than a year. And then the next question, number 6, Jordan's in a similar boat, has a capital gain of $10,000 on a stock that he held for 11 months, obviously less than a year. Right? They give you that both of these guys are in the 25% tax bracket. All right, well, the key is the timing. There's a reason that they mention longer than a year in number 5 and then 11 months in number 6. With capital gains tax, we talked about this in my presentation, and I certainly hope you've heard it by now. And with capital gains tax, if you hold an investment for longer than a year, then your tax that you owe on that gain is capped at 15%. Right? So it doesn't matter in number 5 that Stewart's actually in the 25% tax bracket. Because he had this stock for over a year, the highest rate he could pay on any gain is 15%. So the 25 is almost kind of a head fake in this case. If you hold a stock for less than a year, any investment, for less than a year and you sell it for a capital gain, then you don't owe 15%. That cap doesn't apply. You have to pay the rate that you're actually in. So Jordan in this case has to pay at the 25% rate. Stewart here gets saved from some tax because he's capped at 15% since he held the stock for less than a year. So when you do number 5, right, $20,000 times 15% is $3,000. You can see I screwed up the first time because somehow I thought it was $25,000. Is $3,000. In number 6 for Jordan, $10,000 in gain, and he owes 25% of that in tax, or $2,500. I check these online. I go up and I look in my solutions folder. Number 4, right? Number 5. I'm sorry. Number 5. There's your $3,000 tax for Stewart, and there's in number 6 your $2,500 tax for Jordan. Okay. So I would check these every time, make sure I'm understanding where they came from. If you don't understand where the answer came from, try to read the description. If you still don't understand where the answer came from, email me. Right? Call me during my office time. We'll talk. I'll try to explain where they came from. All right. Let's talk about number 10. Some of these early ones here are relatively basic FICA contribution things where you're just multiplying things by 4.65%, or 6.2%, excuse me. I don't know why I said 4.65. 6.2%, excuse me, for Social Security, or 1.45% for Medicare, or 7.65% for total FICA, stuff like that. Those are the early ones, and they're relatively easier. Let's talk about a couple that are a little more involved. Okay. So 10, taxable income. Nick is married and has 3 children in college. His wife is a homemaker. Nick has an adjusted gross income of $37,400. If Nick's standard deduction is $11,900, his itemized deductions are $12,200, and he gets an exemption of $3,800 for himself, his wife, and each dependent, what is his taxable income? Okay, this is starting to think a little bit more realistically about the tax situation here that Nick has. So, first of all, let's talk about the deductions. As you heard in my presentations, you can only take one of the 2 deductions. So the key when you're considering your tax situation every year is, well, do I have enough in itemized deductions to exceed the standard deduction? If so, I want to itemize because I can take a bigger cut off of my income before calculating tax. If I don't, then I'll just stick with the standard deduction, which, as you can tell in Nick's case, they're married filing jointly. That $11,900 standard deduction, that's the 2012, and I think probably 2013. That's the 2012 standard deduction for married filing jointly. We saw that in our slides together when we were going through Chapter 4. Okay, now the adjusted gross income Nick has here is $37,400, right? So that might have already taken care of some items withdrawn, like retirement contributions that he made pre-tax, stuff like that. So there might have been some deductions. His real income probably wasn't $37,400. It might have been $40,000 or $44,000 or something like that. But anywho, his adjusted gross income after some of those things that are already taken out is $37,400. Well, which of these deductions is he going to take, the standard or the itemized? You know the answer already. He's going to take the itemized deductions, right? He's going to itemize because $12,200 is a bigger discount from his adjusted gross income than $11,900. We're trying to take this $37,400 and work it down even further to a taxable income. You can't take both of these, the 12.2 and the 11.9. You only get to take the one that's bigger. You'll go ahead and take the itemized deduction in this case. Now that means some extra paperwork. You got to file that Schedule A that we talked about in our slide. You got to file that Schedule A to kind of prove or show where your itemized deductions came from. But you'd want to go ahead and do that to get the tax bill lower. Now if the tax bill if his itemized deductions added up to be like $11,906, he might just say screw it and go ahead and file the standard deduction because it wouldn't have to fill out the schedule, and it's only about $2 in tax difference. So, but in reality, if it's this much more, $300, let's go ahead and itemize. So I take the $37,400 in adjustable gross income and subtract the deduction that I opt to go with, which in this case is the itemized. It's the bigger one. So what does that leave me with? $25,200? Okay, that's what we're down to now. Now, as you saw, one of the weird things about about calculating taxes that we tend to keep those exemptions in the calculations, and we tend to do those kind of at the end here, after we've already done your deductions and your credits. Then we do the exemptions. I'm not exactly sure why exemptions aren't just kind of put in there with credits earlier, but that tends to be the way that this goes. Anyway, regardless, all the information you need to do the problem right here is self-contained in the problem, and it'll be the same way when we do your My Finance Lab problems for both your assignment and quiz this week. And when I give you one of these on the exam, it's going to look just like this, but it'll also have different numbers. I'm not going to just lift the same problem exactly. So you got to get the idea of what's going on, not just memorize the numbers. He gets an exemption of $3,800 for himself, his wife, and each dependent. These children are still in college. He's claiming them as dependents still, and that's how it works in most families. So $3,800 per person times 5 equals, and I think I know the answer, but it's 17,000, right? But no, 18,000, right? Ugh, 19,000. What am I thinking? Anyway, $19,000. Okay, that's his exemption amount. So you were down from 37.4 before any deductions. Deduct. You're at this intermediate step, and you also are exempt on this amount of your income. So we get to subtract that away. You're literally down to $6,200 in taxable income in this case. Here's the answer, number 10. Okay, $6,200. Now when you think about that, he's going to be in a pretty low tax bracket, right? So he's only going to end up paying, what, maybe $600 in tax or something like that. That's what happens when you get all these deductions and exemptions rolling for you, especially when you don't have much income. We have a progressive tax structure like we talked about in my slides this week, where those that make less pay not just a lower amount, but a much lower rate typically, especially after you factor in all of these things. All right, we're going to do this in part 2 since I'm at 12 minutes and I want to do 2 more problems with you. So let me cut this video right here and we'll do a part 2 this week for chapter 4.